Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Tata Capital and WeWork announce IPO pricing as the rush to go public intensifies. More than 73 companies have listed on Dalal Street so far this year, raising more than 1 lakh crore rupees cumulatively.
Recur Club bags $50 million to scale autopilot debt financing. The fundraise includes $8 million in equity led by InfoEdge Ventures, LC Nuva and Finbox Capital. The remaining $42 million was debt funding from Incred, Ugro and others.
Vani AI Research raises $400,000 in pre-seed funding from venture capitalists, raises funds to scale its voice stack, deepen models and IP. The startup has been selected for the Google for Startups AI Accelerator 2025 cohort, also an active part of NASSCOM Gen AI Foundry.
A top management shakeup sees EdTech unicorn Lead Group appoint Moez Saif as Chief Financial Officer, promotes Deepak Hariharan to Chief Business Officer. Other leadership changes include Anuj Kashyap as CTO and Prasad Narasimha as Head of HR. Move aims to support the firm's goal of reaching 10 million students and going public by 2030.
Elon Musk's social media platform X will challenge the Karnataka High Court verdict upholding government's power to order removal of content. The company says it will move the Supreme Court to defend freedom of expression.
Those were the headlines that we're tracking for you this evening on What's Brewing Today. Finbox is making big moves in the world of digital lending. The Bengaluru-based fintech has raised $40 million in a Series B funding led by Westbridge with participation from Aditya Birla Ventures and A91 Partners. Already powering credit infrastructure for over 130 lenders, Finbox now plans to scale globally, deepen its AI-driven product stack, and build the rails for the next generation of lending. Joining me now to discuss this further is Raja Deshpande, the co-founder and CEO of Finbox. Raja, thank you so much for taking time out and being here with us on Startup Street. You know, you are a B2B credit infra firm, right? If you could sort of take us through the kind of solutions you have on offer and the gap that you're trying to address.
First of all, thank you for having me on the show. Finbox is a vertical SaaS in the B2B space, and our infrastructure starts from the distribution layer, which is the embedded finance piece, which is an API piece that enables a bunch of, LSPs, as RBI calls it, digital platforms to offer credit seamlessly. And as we go down the value chain, we have data products like a bank statement analyzer plus account aggregator piece. We have platforms like Sentinel AI, which is a decisioning system and a rules engine. And then we have the entire loan origination system stack that supports personal loans, business loans, loan against property, as well as housing loans now. So basically, there are multiple gaps that we are looking at. One is all of the lenders are always looking to build omni-channel experiences for credit, which is be it building out channels between digital sourcing pieces as well as pieces in the offline mode. And digital transformation is also a big need where they are trying to unify a bunch of the software that they've bought in the past, which is legacy. So we solve all of this in one shot.
All right. And, you've got over 130 large clients already on board, right? So what kind of demand are you seeing, from banks, NBFCs and fintechs now?
So as everybody knows, lending saw like a weak last year's festive season, but then there was a huge bounce back, that started off sort of mid this year on the personal loan space, and then the MSME credit unsecured piece has followed. And as the government has eased, sort of reduced GST, the consumer credit piece we are seeing, take off fairly spectacularly. And we are seeing innovation in the kind of, credit products people are creating. For example, one interesting credit product that has, over the last year done really well for us is the equal daily installments piece. where all of these customers, all of the platforms like BharatPe, PhonePe, Paytm, they embed credit into their merchant apps, and then through our pipes offer credit to their merchant base. And we are doing upwards of 400, 500 crores per month on this within sort of a year and a half. Right. So what we are seeing is that innovation on credit products, experiences, etc., increases in the upcycle, and this is what we are seeing now. We are also seeing banks participating more and more in digital lending starting last year. A lot of post-COVID, sort of digitization focused on the liability side, but then the asset side, which is the loans pieces, have come together fairly well, and we are seeing a lot of demand, because of the innovation piece as well as the consolidation
Sure.
and digital transformation pieces from
Right.
banks.
We're running out of time, so if you could quickly tell us, you've raised this $40 million at this point. How do you plan to utilize these funds? What's on top of the agenda?
So 2-3 things. One is to expand our product portfolio. This is a large value chain, and we are, as I said, vertical SaaS player. Second, we are expanding into multiple geographies, including Southeast Asia, Middle East, and the developed markets as well. And third is a little bit of inorganic activity going forward in places where we find high quality assets that can add to our product portfolio.
Sure, and you've been growing 100% year on year across your product verticals, right? If you could share where your revenues stand today and how your solutions are helping lenders manage NPAs more effectively?
So we are at shy of, near the 15 to 16 million sort of mark. I think this month, hopefully, we cross that. But see, as I said, right, NPAs are managed at various points. One is, of course, the entire underwriting. How do you adjust underwriting while onboarding the customer? And then the second piece is on the collections management side, where we have products such as CollectX, which gives early warning signals to customers so the lenders on their portfolio. So both on the underwriting side, where we enable lenders to iterate on their credit policy and then sort of create more effective credit policies, but then also on the portfolio management side, where we give them early warning signals on how to manage their portfolios better.
Right. And you've
That's
also spoken about international ambitions, right? So
Yes.
when it comes to expansion, what kind of geographies are you eyeing globally?
So we are starting out in the emerging markets. So we are starting out in Southeast Asia. So we are already doing work in Vietnam and Philippines, and a little bit in Indonesia also has started. So those are geographies that we will double down on, this year, and then we will start working in the Middle East markets, and then potentially in the US in sort of 3 or 4 quarters.
Sure. And, you also spoke about inorganic growth plans where you see, something that could be important for the company. So where do you stand on that front? What kind of companies are you looking at? Are you in talks with anybody at this point?
So we've, we look at this opportunistically. We have, we've evaluated certain opportunities in the past, 3 or 4, but there are 3 or 4 things that we look at. One is, the quality of the technology stack and the product. So basically the integratability of that product into our existing technology stack. Second is the maturity of the founders and sort of the, the matching of the vision. So as to we want to be working with them at least for 3 or 4 years. Third is, maturity of the GTM stack and the quality of revenue. So basically that matters because in B2B, a lot of companies have services revenues which are not recurring, which obscure the true sort of quality of the business.
All right.
We want recurring revenues for the business to be able to acquire. Yeah.
Still looking out for opportunities there. All right, Rahul, thank you so much for taking time out and being here with us on Startup Street. Thank you.
Thank you.
All right, moving on. Sustainable home essentials brand Ecosoul Home has raised $20 million in equity and debt led by Accel and marquee strategic investors. Founded in 2020, the company today has a global footprint across the US, UK, Europe, GCC and India with retail partnerships that include Walmart, Costco and Waitrose. With over 1,000 certified compostable products and 12,000 plus retail touchpoints globally, Ecosoul Home is on a mission to become one of the world's largest fully compostable global home essentials brand. To discuss the Series B fundraise and the road ahead, I'm now joined by co-founder and CEO Rahul Singh. Rahul, welcome back to Startup Street. This Series B round is a mix of equity and debt, and you claim to have entered the Recur Club. What is the current valuation of the company, Rahul, and how do you plan to deploy this capital across manufacturing, technology, and expansion?
So, Shruti, first of all, thank you so much for having me on the show and be able to share our story. We are right now in the process of flipping the structure from US to India and making India our headquarters. So there are court documents that are filed on both the sides. So we are not publicly discussing the valuations at this point in time. But let's just say we are very firmly within the Unicorn Club, trying to get to the Unicorn Club within the next couple of years.
All right. And what about the fund deployment plans?
So basically, we have raised $20 million, and this is more of a bridge funding to the structure flip, right? We are already profitable, very solidly profitable, in fact, right? And that's a very proud moment for the company. But there are three major areas we are trying to deploy the funds. First is we are doubling down on Made in India strategy. So about 2 years back, we had only 35% of production come from India. Today is close to 80%, and we are trying to get to 95% India-made products to be sold globally. So that's one of our plans. And the second major expansion plan is geographical expansion, where we are looking at more countries within the Europe and GCC area to expand into.
All right. Like I mentioned earlier, Ecosoul today has over 12,000 retail touchpoints and partnerships with Walmart, Costco, and Waitrose. Rahul, what is driving your global acceptance, and how do you plan to scale distribution from here?
Shruti, the only thing I would want to add on to that is our e-commerce business is as large as our retail business. Essentially, we are not only selling through all the major retailers of the world. In fact, the only Indian sustainable brand on the shelves of Walmarts and the Targets and the Costcos of the world, right? But a fairly large e-commerce and quick commerce business as well. What is driving our adoption worldwide is essentially three things, right? One is we are the probably the only certified food grade sustainable products company that comes out of India, right? That's number one. Number two, our product innovation. So for example, we are the only company in the world that does bagasse-based toilet paper, kitchen towel roll, facial tissues. So it's a product innovation. And obviously we have been able to really crack the price code. We are basically within 15% of plastic. So I think these are the three things that drives our adoption.
This brings me to my next question. The sustainable home products market, is projected to hit nearly $664 billion by 2034, but affordability has always been a barrier. You mentioned pricing. So tell me, how have you managed to crack the cost equation, pricing within just 5 to 15% of conventional plastics while maintaining quality and scale?
Shruti, I think the formula was very simple and it was hiding in the plain sight. Everybody thought that, hey, the way to get to better pricing is through scale. We actually went the other way around. We actually created micro factories in the areas where the raw material was there. So, for example, we have factories in Tumkur and Shimoga and Muzaffarnagar and Sitarganj, right? So we went where the raw material was and we created a vertically integrated supply chain. There are very few manufacturers in India or very few brands in India which manufacture themselves. And our competitiveness comes from the entire vertical integration. We run our own supply chain. It's a very technologically run supply chain, some of the best working capital cycles. And more importantly, we are very close to the source raw material. So that keeps our cost very, very low. So we have micro factory strategy instead of a large manufacturing unit.
Like you mentioned, you've got over 1,000 SKUs spanning tableware, kitchenware, personal hygiene, and baby care. Rahul, which categories are seeing the strongest traction globally? If you could quickly tell us that.
So Shruti, all our categories are seeing triple-digit growth, by the way, right? But within that, right, we'll say the personal hygiene and the baby care segment, they are showing like really, really high growth, right? It's more than 250% year on year. So I think that's the categories that we are betting on heavily for the next couple of years.
But triple-digit growth across all your segments is what you're saying. And with this round, Rahul, you've signaled entry into new high-growth segments like chemical-free home cleaning and tree-free paper products. How large is that opportunity, and what's your strategy to win in these markets?
So I think the strategy to win is very, very clear, right? We are a customer-focused, brand first, right? So our firm belief is that nobody wants to consume single-use plastic. Nobody wants to consume chemicals. We just have to give them an affordable option to move away from chemical-based, cleaning agents and chemical-based, tree-based paper. So our goal is to really create those options at an affordable pricing and with a very strong quality consistency. So essentially, that's what we believe will help us win in the market.
Okay.
Not only in India, by the way, we are a very global first company. More than 80% of
Sure.
revenue comes from outside of India. So we
Absolutely.
create products which are global.
Absolutely. 80% of your revenues come outside from India. But, speaking of competition in sustainable products, it is intensifying with both startups and FMCG giants in the mix. Rahul, what's Ecosoul's moat as you scale globally?
So again, our biggest moat is our vertical integration and the product innovation that we are doing, right? Shruti, we are not afraid of the competition because our real competition is plastics, right? It's a 50-year-old industry with multi-billion-dollar brands that exist globally. And if we have been able to make our mark and get into all the stores, we have been competing with them for the last 5 years now. And we have been competing with them profitably. So what really worries me is our ability to scale faster and reach the customers who want our products and not really the competition.
All right. On that note, it's time for me to wrap up this conversation. Rahul, many thanks for joining us and wish you the very best in your mission of becoming one of the world's largest fully compostable home essentials brand. Thank you so much for your time.
That is made in India. Thank you so much, Shruti. Thanks for having me on the show.
On that note, it is time for us to head into a short break. But coming up next, fintech startup Recur Club has just raised $50 million in a Series A funding round, one of the largest rounds in India's alternative debt space. That's a CNBC-TV18 exclusive. Details on the other side.
Welcome back to Startup Street. Fintech startup Recur Club has just raised $50 million in Series A funding, one of the largest rounds in India's alternative debt space. Now, the company, which claims to have already facilitated over 3,000 crore rupees across 2,000 companies, is betting on AI to make debt as simple as equity for India's startups. Aishwarya Anand is here with an exclusive.
Debt is usually the boring side of finance. Slow paperwork, endless approvals, and founders pulling their hair out. But what if I told you that now raising debt could be as easy as grabbing a cup of coffee? Well, that's exactly what fintech startup Recur Club is promising. Compressing 3-month cycle loans into 48 hours with AI doing the heavy lifting. And now, with $50 million Series A in their bank account, they say they're ready to supercharge India's startup credit story. So, let's go and meet the men behind it, Eklavya Gupta and Abhinav Sherwal. Break this round for us. $8 million in equity and $42 million in debt. What was the idea behind this kind of a structure, and what does it signal as, for your capital strategy?
Equity will be used primarily for spreading our marketplace to offer new products today, right, from a lending point of view, different kinds of debt products, and penetrating into different geographies pan-India. And the debt commitments on the marketplace will be actually, these are special curated programs with the debt lenders on the marketplace who will actually further on-lend via the platform to the different borrowers.
What's the growth rate year on year, and when do you expect to hit profitability? By when?
So I think we're growing 100% plus year on year, right? Like last year, we saw 120% for growth for ourselves. From the overall numbers, we have done 3,000 crores across 2,000 plus companies till date. Our business runs as a business model on a percentage fees that we charge from the borrowers typically, and times from lenders selectively. That number is around 2 to 2.5% depending on, the type of borrowers, etc. Let's say. So, that is where we are. From a growth point of view, we're looking at around a 10,000 crore annual run rate within the next 2 years, right?
At the heart of Recur Club is ICA, which is your proprietary AI credit analyst, right? So how exactly does ICA compress debt cycles from 3 months to 48 hours for unsecured loans?
So what ICA does is it's actually connected to all the regulatory sources like your MCA, banking, GST, legal, as well as anything which is available on the web. So imagine it's almost like something on autopilot, right? Whenever a company comes, instantly we are able to create a 360-degree profile, be it risk, their compliances, their financials. So whenever our credit person wants to pick up every data point sits in front of them in one platform. So that is how we are reducing time to decisioning.
AI underwriting sounds attractive, right? But a lot of it also has to do with trust, context. So I want to understand that how do you ensure that your algorithm avoids bias and pricing of risk?
ICA is like a co-pilot to our credit analyst, where it does everything of the manual work, but in the end, it just recommends and not forces the decision. So our underwriting policies are always created and vetted by human.
Eklavya, you guys have also launched a 150 crore, fund for D2C startups in the quick commerce space. What does that mean? How many startups are we looking at in the quick commerce space that way?
The 150 crore average ticket size would be around 3 crores per company.
Okay.
It would be spread between 1 crore to 5 crore, depending on the size, scale, credit quality of the companies. So let's say 50 companies in that 150 crore fund is what we endeavor. The growths have been phenomenal. Like some of the brands that we speak to, right, have grown like 5x in 6 months just on quick commerce, or even more at times, right? So they need immense amount of inventory as a D2C brand to purchase, working capital management, right, receivable management, etc. So this is their bread and butter to grow.
Have you already started deploying capital from that fund? How many investments, if you have, then how many investments have you already made till now? And by when do you plan to completely exhaust that money? What's the target on that front?
So more than 75% of that fund has actually been deployed because of the demand that we see, right?
Correct.
Recur has funded more than 2,000 companies, out of which let's say 500 companies were D2C. The next funds are in pipeline that will come on soon.
Which sectors are you betting big on? I mean, D2C and SaaS are the obvious answers, but other than that, which other emerging sectors is sounding very enticing for you guys?
In SME, we have picked manufacturing, solar, or some amount of pharma and agriculture. I think these are the 4 next sectors that we have picked up.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching.